Welcome to the CLS Weekly 3 October Review. I am Rusty Vanneman, the Chief Investment Officer at CLS Investments. And with me this month, I have Grant Engelbart, Portfolio Manager at CLS Investments. Welcome, Grant.
Thanks, Rusty. Nice to be here.
Yeah, you know it. Well, a lot to talk about in the Weekly 3. And, of course, let's start off with the numbers. And it was a good month again. The markets were up about 2% in the U.S., up internationally. They were up a little bit more, including emerging markets being up 4%. Bonds were positive. Commodities were even positive. So I say this every month. It was another great month for globally diversified portfolios. Year to date, great numbers too. International, our U.S. is up 16%. International is up over 20. Emerging markets up over 30. Awesome numbers. Commodities are still a little bit down. One other thing I'd like to talk about is the one-year number, something that's kind of interesting right now, because fourth quarter of last year was so extraordinary after the election. But right now, if you looked at the one-year numbers at the end of last month, the U.S. is slightly ahead of international because U.S. did so well at the end of last year. And also extraordinary is one of the first times in a long time the 12-month return of commodities is up over the last 12 months. So anyway, a lot of reasons for it. And one of the reasons, earnings growth. And that's one of the reasons why you're here too, is you're an expert on earnings growth. Every day we have our daily huddle in the morning. You give us all the lowdown on the top earnings. So tell us some of the highlights from earnings.
Sure. Well, the market rally hasn't all been just pure speculation. There has been, we've seen strong earnings growth. So the latest number with about 80% of U.S. listed companies reporting is about a 6% growth rate, blended growth rate, which is great, and that's helping push stock markets higher here domestically. And we've seen earnings beat rates, at least on the earnings side of things, strong, especially in areas like tech, healthcare, and financials, all areas that CLS has emphasized. And that's great. And then overseas, another thing that's worth touching on is earnings growth in emerging markets continues to be really strong.
Fantastic, yeah. It's a beautiful chart.
It's part of the reason we see the continued strength in those markets as well.
Well, a couple of things I talked about in the Weekly 3 that were positive to the markets, at least at the end of the month, were we have a new nomination for Federal Reserve Chairman, Jerome Powell, pretty much a status quo selection. And then there's a proposal for tax reform, make it simpler, lower some rates. But that's something we're not really going to do much about until we get more detail on it. But that's some things we talked about in the Weekly 3.
So speaking of the Weekly 3, we've recently rebranded the whole piece and pretty excited about that. You want to talk a little bit about that?
Thanks. I'm glad you asked. Yeah. Well, I think the Weekly 3 is just a better title. I mean, in a way, we were always talking about three topics. I mean, that was sort of the basic structure. And the idea is that these are three things that we think that people should know what CLS Investments is thinking or doing about the markets or the portfolio. So, as I always say, what we do here is we just don't manufacture a rate of return. It is also about the entire investor experience. And that includes communication, that includes education. And so, as you know, you write a lot, I write a lot, you speak a lot, I speak a lot. We do so much. We do these videos. Also, another rebranding we did is the podcast. We were doing that monthly. We now do it twice a month. And instead of being only 3 minutes, we've expanded to 30 to even longer. And it is called The Weighing Machine, and which I think is a pretty spiffy title for a lot of reasons. But obviously the idea is that longer term valuations and fundamentals win, and that's kind of the weighing machine aspect. And shorter term, it's more about sentiment and emotions, and that's kind of the voting machine. But anyway, the latest podcast, by the way, just put a quick plug in, it's a great one. As we do have two interviews. Not only am I talking about what we're thinking about at CLS, but there are two interviews. One is with the godfathers of ETFs, Reggie Brown, fantastic interview. And then probably, maybe even better than that, is Senior Portfolio Manager at CLS, Mark Pfeffer, is on, and we have a 25-minute interview with him, which is fantastic.
It's definitely a must listen, and our podcast in general, I think, has become that as well.
Yeah, I think so too. So obviously on the podcast, we'll talk about a lot of things, including the investment themes. As well.
Well, speaking of three things, we have three investment themes, and we have, for the last year, it's not necessarily based on a yearly time frame, but it's been global value theme that we basically looking for value across the world, which is really kind of a philosophy of CLS in general. Smart beta, and then also creative diversification, thinking of more creative ways to invest our fixed income portions of portfolios, adding in commodities and alternatives and things like that as well. But I know smart beta is something that is very important to us at CLS in our portfolios, and how we capture smart beta and utilize those type of products in portfolios. And it's still a bit misunderstood. But I think in the write-up, you do an excellent job of describing what smart beta is, again, for investors and marking that down. Do you want to talk a little bit about
Sure.
that?
Mean, you write a lot about smart beta and speak about it. I do, as do many members of our portfolio management team. You know what? It's interesting. Smart beta, the adoption rates for smart beta ETFs continue to increase, advisors, investors, but that adoption rate is only slowed because there's still a lack of understanding what they are. And we spend a lot of time, again, explaining it. And I think there's really two big things to take away from it myself. One is, I call it that smart beta is basically capturing the essence of active management in a fraction of the cost. So the big thing there is you're getting a deal. You're getting a really good deal where instead of paying 1% plus for an actively managed mutual fund, you're paying 1/3 of 1% on average for a smart beta ETF. So that's it. But even more important than that is that smart beta or factor investing just works. And one thing that I do go through in the weekly 3 is to show a lot of data showing how over the last 20 plus years that the average factor has had a 2% advantage over the overall market. So it's adding an excess return of 200 basis points a year. And the story even gets better is that in the down years, the performance is even better. It's between 4.5% to 5% per year. So it's phenomenal. On that point, so you and I, we were in New York last week for a conference, and a lot of the attention was on smart beta. What were some of your takeaways from that conference yourself?
Sure. There was a lot. It was a great conference, specifically one product provider behind smart beta, but they've done a lot of work on this for years, and they have products that are multi-factor. So you think of a factor as a building block to these smart beta ETFs, and they combine these factors together to not only provide that excess return you were talking about and show in your write-up, but provide a more consistent return because the fluctuations and correlations between these factors are low. But a big takeaway from that, being in New York is always great, is large global leading firms that are focusing a huge amount of attention on ETFs and their ETF efforts and bringing their knowledge and their history of sometimes centuries of asset management history to the ETF wrapper, and they're choosing to do it through smart beta, which I think is a huge takeaway that these firms are that committed to the idea of smart beta as a product idea in general. Anything else you took away from the conference?
You know what? That was so well said. I don't think I can add anything to it. I had a couple of things I wanted to say, but you nailed it. So
thanks, Rusty.
Yeah, awesome. I think I might have you back.
Great. Glad to be back.
All right. Well, thanks, Grant, and thank you for your time and trust in CLS Investments.